Hello guys, today I am starting a video series on auditing. Today we will do introduction to auditing. We will cover following topics: definition, features of auditing, true and fair view, objectives of auditing, types of error, types of fraud, principles governing audit, concept of materiality. Definition. What is audit? Audit is a systematic checking of books of accounts performed by an independent person in order to ensure that the book of account gives true and fair view. It is done with the help of vouching. So basically in auditing, a person outside the organization comes and checks our account so that we can make sure that the book of account give true and fair view. Features of auditing. Features of auditing are it is a systematic checking of books of account. It means that the auditors check systematically all books of account. It is performed by an independent person, which means that it is not a person which is involved or which is a part of organization. It is from outside the organization. Ensure the book of account gives true and fair view, and it is done with the help of voucher. But there is a question, what do you mean by true and fair view? True and fair view means that the book of account are prepared as per applicable accounting standard. For example, capital expenditure is not treated as revenue expenditure, and revenue expenditure is not treated as capital expenditure. It also means that the duties of employees are properly segregated and they are made answerable for the work performed by them. What are the objectives of auditing? Sorry for the mistake, here it will be auditing. The primary objective is to ensure that the book of account gives true and fair view, and the secondary objective is to detect and prevent errors and frauds. What are errors? Errors are of basically four kinds: error of principle, error of compensation, error of omission, and error of commission. Error of principle means basically when the principles of accounting is not followed. For example, the previous example, that capital expenditure is treated as revenue expenditure and revenue expenditure is treated as capital expenditure. Error of omission means the transaction is not recorded. Error of commission means the amount of the transaction is wrong. Error of compensation. Error of compensation. Error of compensation means that the two or more accounting errors cancel out each other, making difficulty to identify the correct error. What are types of fraud? Fraud are basically of two: falsification of account and manipulation of cash. Falsification of account means either entering wrong amount or even you can say the wrong accounts are made at all. Manipulation of cash means that you are manipulating the cash at counter. The difference between fraud and error is of intention. Error is without intention, whereas fraud is with intention. Means fraud is deliberately done in an organization. What are the principles governing audit? While performing audit, auditor has to consider some principle. He should plan audit well in advance and in detail. He should plan and do audit as per his plan. He should be honest in the work of audit. He should not show dishonesty. He should be impartial. He should not make book in favor of management or in favor of shareholders or in favor of third person. He should be impartial in whole the process. While pursuing audit, the auditor came to various secret information of the company. He should not divulge it to any of his secret partner or anyone. All the evidence collected by the auditor should be properly recorded. He should be consistent in the work. Then only he will complete the audit work. He should give due reference to the legal laws of the state. For example, company law or any other law which is applicable on company. He should prepare audit working paper. He should check the internal control of the company, and he should also make audit report and sign audit report and give it to the shareholders in the annual general meeting. Concept of materiality in auditing. It is a very important concept because under this concept, auditor considers degree of error which shall be tolerable by the auditor performing the audit work while drawing his opinion through the audit report. It means that what errors the auditor feels to be material and what not to be material. And here we end this lecture. Thank you for listening.